I hope everybody is having a great week. We just finished another. It was a really good week, I think, for the stock market. It was relatively bullish, as you can see here for the week performance. Tesla ended up 13.4 for the week. Microsoft was a little bit of a laggard at 1.42. Google was having a good week, but then they just got destroyed at the end of the week and finished at 3.91 with the Snapchat news. And Snapchat was all about slowdown in advertising, and of course anybody that has subscribers or advertisers such as Google, Meta, they got taken behind the shed on Friday, and they had a couple of bullets put behind them. You could see that Meta was down 7.59, Google was down 5.81, Verizon just fell off the cliff. T-Mobile was down. Verizon was down 6.74. So in that respect, the week ended in a negative note. But we did have a very nice run throughout the week. As you could see here, we had a good climb throughout the week. And I had that 401.44 as a target for a couple of reasons. One, because that's where the gap is. And number two, according to the VIX volatility, that was the top of the risk range. For this week, the VIX volatility has the top of our risk range right around 402, which is still an expectation of closing that gap right there on the lower range. And I do expect a bit of a pullback this week at some point. I'm not sure where, but I do think we'll play both sides of the risk range. Fluctuating anywhere from 385.25 all the way to 401.44. I don't think we'll break out of either direction. We have the potential to break either direction. That's just the reality of things right now. There seems to be a nice consolidation pattern going on here. But one thing that gives me confidence on the bull side, you could see the 50-day moving average is starting to flatten out, and the 20-day is starting to move up towards the 50-day, which is not something that has happened in any of these other rallies. You could see this big rally that we had. The 50-day still continued to go down, and the 20-day didn't really start moving up until the end of the rally, which was one of the reasons I didn't have confidence in this such a big move. And one of the reasons I do have more confidence in this move over here is we have a low, we have a higher low, we have a higher low. Of course, we need to come down and test that trend line for strength. This trend line right here needs to be tested for strength. The 20-day we need to give the 20-day more time to move up towards the 50-day. So I would like, my preferred scenario would be to have a little bit of a pullback into this box right here. And then once we touch this box, what we saw last week is every time there was a dip, the buyers came in and bought it up. But I don't think that it's that great of a scenario or a reaction if we continue to drop under that 390 range. Under that 390 range, we really are opening the door to closing some of these gaps over here. We have a gap right here at 379. We have a gap down here at 369. Those gaps will get closed eventually. I don't know when. I keep saying that the low of the year might not necessarily be in, but I don't see a drop like these kind of drops coming. Though this week we do have on the agenda, you could see here on Wednesday, we do have the Fed funds rate. We do have the quarterly GDP, which if the quarterly GDP comes in negative, that'll be 2 consecutive negative GDPs. We have a whirlwind of earnings, and you could see on the earnings reports we have Visa, Microsoft, Google, we have Meta on Wednesday, Coca-Cola, McDonald's on Tuesday morning, Chipotle on Tuesday night, Ford, O'Reilly, Qualcomm on Wednesday evenings, Timas on Wednesday morning, Apple, Amazon on Thursday. Look at all these just big players. Just the whole week is just a slew of earnings that can move the market in either direction. So you have all this earnings that can create a lot of volatility. You have all the economic data that can create a lot of volatility. And then on top of that, we have August is the worst performing month for the Dow Jones and the S&P since 1988. That doesn't sound good. It doesn't sound like we have a sustained rally coming. But what does give me a lot of warm and fuzzies on the bull side is that we are building this nice base. The NASDAQ is one of the things that I have been playing a lot, and really the reason I play it a lot is because the percentage moves are bigger. But it's more difficult to create a technical analysis off of the NASDAQ, and it's more difficult to have solid entries and exits. I do see on the triple Qs that 296 is going to be solid support, and I would expect to pull back to 296 before we start jumping around. The Russell also looks like it's broken out of its downtrend, and it came down and tested it for strength on Friday, and it held up right at that support line. So the fact that it held up right at that support line does give me confidence that it has potential to recover. But once you zoom out of the Russell and you look at a longer picture, that's not a pretty chart. That's a chart that's screaming more like roaring a big bear roar, and I don't think that we're fully out of it. There is another trend line right on top of the previous trend line. That was just a short-term trend line, but you can also look at it, the bear case that we got rejected from the longer-term trend line. So the Russell is showing some strength, and it is showing some weakness. The NASDAQ is showing strength, and it's showing weakness. The S&P 500 is showing strength, and again, we're right at a point where I did expect the bears to come in and start playing again. So there's also the weakness right there. I've been saying it for about 2 weeks. It's a coin toss. It can go either direction. But if you look at these ranges that we're playing in, you can clearly see the support and resistance lines, and you can clearly play the support and resistance lines and make money playing either direction. Whether you play UVIXI, SQQQ, TQQQ, SPY, play the upside, play the downside, because I will tell you, when you start looking at the economic indicators and you see the yield is inverted and it's getting even more inverted, that's just a sign that eventually we are going to get that call that a recession is coming, or that we're in a recession. And once we get that call, it does have that possibility of disrupting the market. It does have the possibility of making, at least for the short term, the market fall. Some of the other economic indicators that I look at, gold, when gold goes up, it means it usually is an indicator that there's instability in the market. Of course, once the instability passes, gold kind of fades, and you could see gold fading, and it faded really hard. It made it all the way up to a little over 2,000, and then came down to 1,700. And is gold dropping a sign that the instability is over and we're going to go back up? Well, if you zoom out of this chart a little bit, let's go to the 10-year chart. You could see here that really what we did is we came down to its support. So it's not necessarily that it fell off of a cliff and it's all of a sudden showing weakness. No, all it did was come down to its support. So at this level right here, it's not full recovery for the economy. If gold continues to go down, then yeah, the stock market will go up and the economy will show some strength. But it's very possible that it's just testing support, ready to make another move up. Another indicator of economic strength is copper. When copper is flying high. When it's getting more expensive, it means there's a lot of demand for it. There's a lot of demand for it because there's a lot of construction. There's a lot of projects in industry that require copper. A lot of electricity, just construction in general. So when construction drops off, that's a sign of economic weakness, and you see copper just falling due to economic weakness. But again, if we zoom out a little bit, you could see that all it's doing is getting to a support line. You have this level right here, which is major support, and copper just came down to it. So it could just be testing that support line for strength before it moves back up. Oil, same pattern. Lumber, same pattern. So you could see all these commodities that are associated with strength and weakness in the economy. They all got really hot. They all spiked up really hard, and then they came down. And all of them right now are at this point. We're in this part of the market where, when we look at the market, we're at a major support area, and if we drop below it, it can turn into a picture like 2008, where we just made a big lower low on the second half of the year. Or we can just keep bouncing back, and all those indicators will fall off of a cliff, and the economy will, the stock market will continue to be strong, or we can go either direction. This is the reason I've been saying for weeks. We're at a point where it's a coin flip. We can go either direction from here. We can either continue to move up on the weekly to the 20-day, or we can drop back down into that bear channel. We are not in a bull market yet. We have not broken this downtrend. This downtrend is still strong. You can see, you can draw these patterns any different way, but if I draw it there, you could see there was a false breakout here. We fell right back into it, got rejected by that trend line, came back down, made a new low, and there we are, right at that trend line. Now Finviz draws this trend line over here, but this trend line over here is just as strong, and it corresponds with the lower end of that trend line. So in my opinion, we're at the very top of that trend line. 400 was the range that I was expecting. We got to it. Now the battle begins, the bulls and the bears. Let's see who wins. My personal preference is that we do pull back to the 20-day moving average, build some strength, recruit some bears, try to get some bears to think that we're going to make a new low, let them all buy puts, and then the bears come in and just jump over that line. That's my preferred scenario, but let's see what happens. If you have any questions, concerns, comments, please leave them below. Make sure you give us a like, subscribe to the channel, share it with your friends, and come visit us on the HaiKhuu Discord. Let's have some conversations on your thoughts and comments on this video. Have a great day, and happy hunting on the market.